Hello viewers, today we are going to look at our next simulation as far as acceptance of a special price is concerned, and we try to see what we can have if at all we do some of the past paper numbers, because what we did in the first video was all about a class example that can help us to get some of the basics that we may need. But the simulation we are going to talk about, just like what we said in the previous video, we said we are going to look at August 2015, and it's going to be question number 2. It's what we are going to look at, and we see what we can have. So without wasting more time, let's dive in and look at what we can be able to get from the question number 2 for August 2015. So when you look at the question number 2, that's our question number 2, August 2015, question 2. So it says that QPL Limited manufactures medals for winners of athletic events and other contests. Its manufacturing plant has the capacity to produce 10,000 medals each month. Currently, all the current production and sales are 7,500 medals per month in a batch of 50. Meaning each batch is going to be having 50 medals. But they have said that the production capacity for the plant is 10,000 medals. But we have seen that the production, what they currently produce and sell, they produce and sell 7,500 medals in a batch of 50. So the company, they are continuing to say that the company normally charges shillings 15,000 per medal. Cost information for the current activity level is as follows. They have given us the variable costs per batch. These costs we have, they are giving us the costs per batch. They are not giving us per only one medal, but it is per batch, and a batch has 50 medals. They are giving us the direct materials, direct manufacturing labor, and other variable costs. They are giving us the fixed manufacturing costs and fixed marketing costs. These are costs per batch, but they are not per unit. So you get that clearly. They are saying that QPL has just received a special one-time order for 2,500 medals at shillings 10,000 per medal. This is a special order. In other words, we are getting a special price, because even the special price, we said most of the times it is going to be less than they are selling. Their normal selling price is 15,000 per medal, but these ones they are going to buy at 10,000 per medal. So they are continuing to say that accepting the order would not affect the company's regular business. The special order requires the company to make the medal in the batches of 100. So they are giving us also the terms, all the conditions they want, all the things they want their products to be like. For us, our main standard, we produce 7,500 medals in a batch of 50. But this one, they are saying they want 2,500 medals at a reduced price, and even the batches, they have increased them. Instead of making 50, we are supposed to make 500 medals. Sorry, 1,000 medals, 100 medals. So we have the required, it says advise QPL whether it should accept this special order. Then they are saying show your calculations or the workings. Then we have part B says QPL is concerned that if it accepts the special order, the delivery time to its existing customer will be affected. The customers are likely to immediately demand a discount of 6% in the month when the order will be fulfilled. With appropriate calculations, advise the company whether it should accept the order. 4 marks. They are also saying identify 3 non-monetary considerations that a company should consider before accepting a special order. These are the things we talked about. These are the things that they will examine you on. So you find that now this one is taking 6 marks. If at all you just know all the computations and you don't actually know these other theoretical aspects, you will end up losing. Because here, instead of getting the 20 marks, you will end up getting 14. To the fact that you've made the computations right. So I'm saying that these theoretical aspects, most of the times we say these answers, they look similar. They are almost the same. So you just get to know how you can be able to explain them, and you differentiate them according to the method or the methodology you are going to be using, or you are asked to compute in the question. So that's all. That's what the question was all about. Let's go to our Excel sheet and see what we have. So when we go to our Excel sheet, we said it is August 2015, question 2, acceptance of a special price. So we said if you have been given this question and they are asking you whether they should accept or not, we have two ways that we normally focus on. We focus on the position of the organization before they accept the offer, and the position of the organization after they have accepted the offer. Those are the basic things that we're supposed to first of all look at. Before we look at the decision points, those are the things that we first have to compute. So let's compute the profitability. This is now going to be before the special order is accepted. So before the special order is accepted, and we said before, it's going to be on the 7,000, because we are producing and we are selling 7,500 meadows. So these are our focus for the position of the company before. So how to compute? Maybe here you can put the details. Then here we'll put the shillings. These are shillings. We can cut off the zeros, just like the way they did in the question. They cut off some zeros. Can cut off some zeros, or we can just leave when the zeros they are still there. So you can try to make this one a bit large. Yeah. So let's go. Let's try to look at now the revenue. We compute. This one is a normal income statement. Yeah, the same way we do them, depending on the information that has been given to us. But we said, when you see that they have split the information into the fixed and the variable components, make sure you compute or you show the contribution, because that's one of the points that they may be looking at. So we start with the revenue. The revenue, we said we have the selling price. They gave us the units were supposed to be 7,500 medals multiplied by the selling price, which was 50,000. So this will give us total revenue of 112,500. We cut off the other three zeros. So now we go on the variable costs. Since they are split everything, variable costs. So the variable costs, we have direct materials. You can call them materials. But since they have given us per unit, so we need to compute, we need to get a working for that. You can put that under working, we have working 1 under materials. Then we have direct manufacturing labor, we can call it direct labor, we can call it labor. This is also going to be our work because they gave us per unit. So we look at the other variable overheads. We can call them other variable costs, other costs that are variable. Let me write it. Let me just call them other costs. So long as they are under variable, we can just see that they were variable costs. Since they have given them per unit, we have also to look for the full totals. So when we get all that, when we get the revenue and we less all those variable costs, maybe we can have this one, the total variable costs. We can have the total variable costs. So we can now start by looking at those ones and we see what we can have. So those are the ones that we are going to look at. But what you have to understand is that when we go to our workings, we can put our workings here. Let's put our workings this side. Workings. Now, the working number 1 we are looking for all those variable costs. So we need to first of all compute the variable costs. The variable costs, our working number 1 is going to be the materials. The materials. But we have to be careful about the question. The question was talking about these variable costs per batch. But in this question, we are seeing that we are handling 7,000 medals. So what does that mean? It means that we need to convert these medals into batches. Because the cost that has been given to us, they have given to us in terms of the batches. So before we look at this, let's first look at the variable cost. We first do the analysis. Variable costs per unit. These are all variable costs per unit. They said that one batch, they say that one batch is equivalent to 50 medals. We need to know the number of batches that are within the 7,500 medals that we have. So we need now to know what will be the batches that are within the 7,500 medals. So this one we can call it X because we don't know we can call it X, meaning that X will be equaling those. So if you cross multiply this, if you cross multiply this, it will be 5x. It will be 5x, which is equivalent to 7,500 medals times 1. Multiply this by 1. So for us to get our x, the value of x will be equaling to the 7,500 medals. We divide by 50, because these were 50 medals, 50x. So we shall get our x to be 150. These are now batches, meaning within the 7,500, we have 150 batches that we are going to be looking at. So this, after understanding this, or after getting the analysis, because the cost they gave us, they were per batch, not per unit, or not per medal. So what we have to do is that for us to get our material costs here, it's going to be the number of batches multiplied by the cost per batch. So this will be easy for us. It will be the number of batch, which are 150. We multiply that figure by the cost of material per batch, which was 175,000. And this will give us a total cost of 26,250,000. Hope everyone has got how we got this, and I can even highlight this so that you don't. We've got this. These are the number of batches, meaning the 7,500 medals are equivalent to 150 batches. So that's the implication. This is where we got that information. That's why we are taking this, the equivalent of this, we multiply by this, because the cost that was given to us is not per unit. They gave us the cost in batches. So this one is going to be 26. But this is going to be, we are going to be lessing it. Or we can just put all the figures, then we add, we just less the total cost. This one we can just put it there. It is 26,250. We are deducting some 0. 26,250. So we go to our labor. Working 2 is going to be our labor, manufacturing labor. This is also going to be the 150 batches, because everything we are computing is now per batch. We multiply that by 200,000, which is the cost per batch. So this will give us 30 million. So it will be this 30 million that we shall take up here. It is 30,000 because we are removing the 3 zeros. So we get also for other materials, working 3 for other variable costs, for other costs. Other costs are also going to be the 150 batches. We multiply that figure by the cost per, which was per batch, which was 50,000, and this will give us 7.5 million. So this is where we are taking the 7.5, meaning it will be 7,500. We are removing the other 3 zeros. So this one we can just press out equals to sum up those. So now this is going to be a negative because we are lessing this from the revenue. So that will give us the contribution. So that contribution will be the revenue, which is 112500 with less of, but since this one is already negative, we are going to just add the total variable costs, and it will give us a contribution of, it will give us a contribution of 48,750,000. So that's what we've got as our contribution. So from the contribution, we less off the fixed manufacturing and the fixed marketing costs. The fixed manufacturing costs and the fixed marketing costs. So we less off these figures. So we need to compute those costs. They have given us those costs in the question. We are seeing that these costs were given to us. They gave us the fixed manufacturing, which was 27, but these we are going to less them off. So it is 27,500 million. So we cut off the zeros, we put 27,500. Then the other one was 17,500,000. So we put 17,500. So when we do that, when we get this one, we less off these two figures, we shall be getting either profit or loss. Profit or loss. So it will be this, but since these are negatives, we can just add. We get, it will give us that in terms of the profit. It will be 3,750,000 as our profit. So this is going to be our profit. So if you have gotten the profit of 3,750,000, then we have to look at after or when we've actually decided to take up the special offer. What are we going to be having? So we come here and we say this one is going to be after the special order. After the special order is accepted. And now it's going to be the 7,500 medals. These are medals. We add the one for the special order. They were supposed to be 2,500. Even if they have not given you the total, you just get the total production, which was 10,000, less of the 7,500, because we said the total should tally to the medals that are produced by the organization, because we can't exceed our organization production, the production that has been done by the organization. So that's it. What we are going to show here is that we are going to have the revenue for the different products and we get the total for that. Then we also get the variable costs for the 7,500. We get also the variable costs for the other 2,500 medals for the special order. So we said here we can just copy this. We copy and we paste it because this is one of the those items that we are going to be working on. So we can highlight. We paste it there. So when that is done, we can now compute, because this is the same information that we are going to be using, which is the information that we wanted also to compute. We are getting it from here. That's why we are leaving everything here the same. Then on this one, we just add this one. This one was shillings in thousands. For the 750, we can maybe just edit here a little bit. These ones we put 750, 7,500 medals. Then we can also go and put the 2,500 medals, meaning we are also going to get the shillings in thousands. This one is going to be the shillings in thousands. So we get also that one, then we get the totals. We get the total for the company. Total for the company. This one is also going to be in 1,000 shillings. In thousands. So we can now transform this information, and we have something that we can do. So we need to compute the revenue that we are going to get for this after selling the 2,500 medals. But remember, the selling price here changed. We are now selling at 10,000, not the 15,000. So this one is going to be, you can maybe put revenue here. It's going to be the 2,500 medals. We multiply that figure by the selling price. Selling price was 10,000. That was given to us in the question. So it will give us that amount, which is going to be, which is 25 million. And that 25 million is coming from the 2,500 medals. But remember, we said we are cutting off the zeros, so we can remove the zeros from here. So it will be that 25 million. So we now go to the materials. Remember, even these materials, we are just going to use the same formula because we computed these things, and we've got the same thing. So we need to just compute when we are multiplying with the level, with the units, number of units. So this is going to give us the number of batches. You can put maybe a working here. For the materials, now we can extend this one a little bit. We'll put now this one. This one was working for the 9,000, for the 7,500 meadows. Now we can compute for the 2,500 meadows. They're working for that. Because it's going to be different in a way that we are seeing that some of these costs that were given to us, they were in bunches of 500. But what they did with the special order for that, let me just add here special order. Special order for 2,500 meadows. So for this special order, we have some additional information that we have. We are saying that for us to be able to get these materials, it's going to be a little bit different because we are seeing that one batch for them, they want to have 1,100 meadows. So for them, they want to have one batch which is equivalent to 100 meadows. Then our assumption is what is going to be the number of batches that are within the 2,500 meadows. So these are going to be our X, and you can try to find that. So our X here, we are going to have the X which will be equal to 2,500, divide that by 100. So this the X will be equal to 25 batches. So meaning what we are going to be producing is going to be 25 batches. But what you have to understand is that the cost for this variable, because this is applying for all the variable costs. The variable costs, the standard that was given to us, because when you look at the costs that were given to us in the question, they based on the 50 meadows in a batch. And what the special order is saying, they want a batch to have 100 meadows. Meaning the cost is going to be doubled also, since the company's standard cost are per unit, are per batch, comprise of 50 meadows in a batch the company is going to produce. But we are seeing that for them, they want a batch to have 100 meadows. So which means it is multiplying the other one, or it will have twice or 2 times the number of the meadows they are going to be producing in the batch using the standard format. So it means these costs, we are going to multiply them by 2, because a batch for them, a batch is comprising of many of 100 meadows. So for example, you may look at, maybe if you at all you have not understood, we can look at a practical simulation or an example to do with this. If let's say it has been a sugar making company, let's say it is Kakira or Lugazi, any of the two, the sugar making companies in Uganda, you find that maybe they have been packing their sugar in a 50 kg, 50 kilogram. In other words, whenever they produce, they pack their sugar in a sack that has 50 kilograms as their maximum. But they may receive a special order for sugar. and you find that the customer is telling them, instead of packing for me that sugar in 50 kgs or 50 kilograms, make that one bag that will be comprising of 100 kilograms. Because you may find that this person is not taking for sale, because we know that sugar is always packed in a bag of 10 kgs, sorry, 50 kgs. You may find that this customer is not going to sell these products. He's going to just use those products. So he's just trying to minimize the space or the storage by packing in huge amounts. He may order, or he can make his special order to have that sugar packed in 100 kgs. It means if at all the sugar company or the sugar making company had set a standard cost for the units they are producing, because they normally produce 50 kgs, a bag which has 50 kgs. But this customer is requiring them to produce one bag, but that one bag having 100 kgs, we shall expect that they are going to double the costs they had set aside for that one bag of sugar that has 50 kgs. They are going to just double the cost, so that to be able to produce one bag that has 100 kgs. That's the same scenario that is happening on these meadows. The meadows, the standard, they have been packing in a batch of 50, but now the customer or the special offer is coming with different conditions, that you pack those batches. You make one batch with 100 meadows. So if the examiner had maybe told us that the standard did not change and they wanted these 2,500 meadows within the 50 kgs, we would just use the same cost. But since they are changing the batch, we have also to change the cost. That's why we are going to be multiplying by 2. We multiply by 2 to double the cost. After doubling the cost, then we can multiply by the number of batches that we have. So that's what we are going to be doing. So for the direct materials here, we can now say direct materials. Direct materials, we said we are going to be getting the cost per unit, which was 1,000. This was per one batch, but that batch was having only 50 meadows. But now we are multiplying the cost by 2 to make sure that we are embedding a batch that has 100 meadows. So we multiply by the number of meadows to get the total material cost that was spent. We multiply by 25. This 25 is the number of batches that we got from the 2,500 meadows. And that will give us a cost. That will give us a cost of 8,750,000. So that's how we're supposed to do that. And we bring that cost, we can put it here, 8,750. Hope everyone has understood that, because it was the only logic that was there. But remember, these are costs, but let's make them positive. We shall turn their total variable costs. So we go to working 2. This is working 2. Let's not change the workings. These are labor, but the labor for the other units. So this, we get the cost, which was 200,000. That is the cost that was spent. That was the cost that was spent, 200,000. We multiply by 2, and at the same time we multiply by 25. I'll give you another scenario or another way we can be able to get these, arrive at this. But let's first get the answers for this. Then I show you another approach that we can use. This is 10 million. Then the working number 3, now this is the other costs. Other costs are also going to be, we do the same, it is going to be 50,000. We multiply this by 2, and again we multiply by 25. So this will give us 2.5 million. So we take these costs this side. This is 10,000 because we are removing the zeros. This is 2.5. So let's get the total here. First get the total before we look at. But this is supposed to be, because we are lessing it. So can just continue like this to get those. Sorry. This one will get the contribution. Contribution will be this will less off the total value of cost to get the contribution, which is giving us that as the contribution that we are getting from those units. So that's the contribution. Then at the end of the day, we less also the fixed costs. But I'm going to show you how we less off those fixed costs. Let's first get another way we can be able to get to interpret the other information. So the other approach is that we can have the 7,000, because they told us the 7,000 medals. If at all we want to buy the medals, the 7,000 medals would yield or could give us the material, these material costs here, that the ones we are seeing here, they are 26,250 million. So now our question is going to be, what about the 2,500 medals? They are going to yield what? And this here we cross multiply. We multiply this times this over this. So it is going to be the 2 million, the 26,250,000. Multiply that figure by 2,500 medals. The whole of it is going to be divided, and put the whole of it in the bracket. We divide the whole of this, we divide by 750. These are medals, even these are medals. And this will give you a total cost of 8,750. And this 8,750 is the same cost that we've got up here. This cost is the same as the other cost, this cost we've got up here. So we had two approaches that you could go and be able to get the same answer. Even for this, you can also try this. You get these 7,500 medals. They were giving us, in terms of the material, of the labor cost, they were giving us 30 million. Now, what will be these 2,500 medals? So it will be the 30 million times the 2,500 medals will divide by 750 medals to be able to get this cost that we have here of 10 million. So here, let's continue with our question. Here, the fixed costs that we have, they are not per unit. So we don't need them we are not going to say that we are going to charge this fixed cost from the special order, but we are charging that cost from the total. We are not charging it from here. We charge it from the total. So we can now go and charge charge it from, because the reason as why we are not doing so is because these costs that we are going to that we are going to incur on this second one, we are not going to remove even this one, even for these medals here. This one we are not going to consider some of these costs. Remember, this one we just copied it from the other side. The whole of that is not going to be considered. We just need only, we don't need this. We only needed up to the contribution, because these fixed costs, we are not going to consider them for decision making. We are only going to deduct those costs from the whole totals or from the company position. So that is going to we only deduct it if at all we are not going to incur the other, we only deduct it from this one if at all we are not going to accept the special offer. Remember, these fixed costs are incurred by the company. They are not incurred for the different models that we produce. So that's why we are deducting these costs. The whole of these costs, we are deducting their totals from the total. Actually, when you copy this, you can just copy them like this and we paste them alongside. Also, we can highlight this. So we can paste those figures there. Let's just write them there. Fixed manufacturing, fixed manufacturing costs, and fixed marketing. Fixed marketing costs, we are putting them, we are putting those ones this side. So this one was 27,500. The last one was 17,500. Because we charge them from, so we get now the totals here, the revenue. We can first of all compute the revenue from here. It is this, we add this. That is the total revenue the company will get, 137 million point 5. Then we also add these costs. We shall get this. We add this. Sorry. We add this. That will be 35 million. That's the cost, that's the total materials that we are going to incur. So we need now to get this. This one, we just added it. It's not. This one, we get this. We get these total costs. Yeah, it is the same. So these are the costs. This is now the contribution, the total contribution that we've got. That is the total contribution that we've got. The total contribution is 55,500,000. So when we deduct that, we shall be able to get the profit or loss, because we are not computing the profit that we got for different items. We are computing the profit that we've got for all the items. So we get this. This will be, it will be this one with less of this, also less of this. That will give us 7,500,000. This 7,500,000 is the profit that we will get. So if you are to make the advice of whether they should accept the project or not, maybe you can come to the advice. Then we can say that it is UPL should accept, because we are going to be accepting, because we've seen that the profit we had upwards. The profit we had upwards is increasing, because if we compare the profit before and the one after, we are seeing that we have a profit. There is an increment in the profit. But here, since we said that for decision making, these fixed costs, they are always irrelevant. If we are to make decisions, these costs, so long as they are total fixed costs, they are always irrelevant. We just compute them to get the profit, but they are irrelevant for decision making. That's why we need to use the contribution analysis. So we need to look at the contribution, the total contribution that we've got. We are seeing that the total contribution also increases, because the reason here is that if you see that you've gotten the contribution which is positive, this contribution that we've got from the special order of 3,750,000 is a positive figure. Since it is a positive figure, it will add on the value of the organization. That's why we are saying that if a product is going to give you a negative contribution, we should reject it. But if it gives you a positive contribution, then we are supposed to accept the project. So this one, we are saying that APL should accept the special order, since it yields a positive contribution of 3,750,000. So this means, because we are seeing that, this means that when the special order is accepted, comma, the company's total contribution will increase from the 48 750,000 shillings to 500,000 shillings. And the company's profit also. Company's profit, we shall also have an increase in the company. So long as you see that we've got a positive contribution, most of the times we are going to also have a positive increase. So even the company's profit will also increase. Will also increase from 3,750,000 that we had before we before acceptance of the offer to 7.5 million. So that's it. The implication there is that when we've got that, we are seeing that we are getting something. So if you have decided to make sure that we accept the proposal, just like what we have computed, that's what they wanted us to do in part A. But the question had part 2, which was giving us some scenarios upon acceptance. So when we accept, because we've seen that the advice is to accept, the advice is to accept. So when this special order is going to be accepted, we have a scenario that our existing customers, those that have been buying, in other words, those that have been buying the 7,500 medals, because these people that came for the special order, they are only taking 2,500 medals, but we have those customers who always buy the 7,500 medals. So we have a challenge, because when you accept these special prices, you find that the price is going to be below the standard. That's why here you are seeing that for them, they are buying 10,000 shillings per medal. But these normal other customers, they are buying 15,000 per medal. So they are saying that if you accept to take up the medal, the special price, it means that will dilute the market. And even your normal customers, they are going to start asking for a discount. They have given us a 6% discount, that they are going to be asking for a discount. So, because that discount you are seeing, if at all these customers are going to be asking for discounts, they are the ones that are going to be benefiting, because they are going to reduce our selling price by 6% because of the special priority we've given to the special price or for the special order. So that means that if we're actually going to accept it, and we are going to also to accept these discounts, we give discount to these other normal customers, we are going to dilute our profit, or we are going to reduce our profit. Even our sales revenue is going to reduce, because this discount only benefits the customer, but it does not benefit the company. A discount is an expense to the organization, because it is going to be reducing your revenue. So, because you find that if a person was supposed maybe to pay 20,000, and you find yourself giving that person a discount, they will pay less than the standard selling price, and that it has an impact, because someone, if supposed to pay 20,000, and you say that since you are paying cash, you pay me 15, it means you have lost the 5,000 because of the discount. So a discount comes as an expense of the organization. So sometimes you may find that the examiner may be talking about the customers are going to charge penalties. Maybe they have heard you've been over-cheating them, so they are going to charge because you've not been charging the same price to all the customers because of that special order that you accept all the special price. And that will lead to these customers to put a penalty, a discount, whatever you call it, but at the end of the day, it's going to be a cost. And it will be from these existing customers because they are the very people who are going to be buying your other products. These people, they may come once, these special order guys, they may come once in a while, once in a month. But these customers are going to be with them for all. So we need to see if at all we decide to give these discounts by accepting the special order, because accepting the special order, you are diluting the market. Because when you accept it, you have to go ahead and give these guys discounts because there is no way they are going to be buying when they have heard that it is given to other people at a cheaper price. So we need to see how much we're going to be losing as a company. So that is going to be in part B. So the part B, for this part B, we need to see how much we are going to be losing. How much the company will lose if they accept. So it is going to be the 6%. That's the amount of the discount. Amount of the discount. Amount of the discount. So this amount of the discount, it is 6%. Because they say that the discount is going to be 6%. We multiply that by our revenue because it is the revenue that is going to be reducing because of the reduction in the selling price. So it will be 500,000. But we are computing this figure on the existing customers. We don't compute on the whole totals. Because here we are, as a company, we haven't made any decision. We are just giving scenarios that if we accept, how much are we going to be losing as a company? So it is going to be 6,750,000. That is the money the organization is going to be losing. So we are going to lose 6,750,000 in return for the contribution from the special order. And if we don't accept the special order, then we are not going to have the discount. But now we are seeing that the contribution we are getting from the special order is only 3.5. 3,750,000, but we are losing 6 million. So what will be the advice? The advice would be that the special order should not be accepted. That's why in the last part you are seeing, they are asking for what are some of the other factors that you may consider before deciding. Yes, here we've seen that we had a positive contribution, but now when these customers start to ask for discounts, we are going to compare the contribution we are going to be getting from this special order with the amount that we shall lose as long as we accept to take up the special order. So if we find that the contribution we are getting from the special order cannot settle the claim and will remain with something, or it cannot settle the discount, then we don't accept it. Just like the way you are seeing here. These customers are going to demand us to give them a discount that will make a company lose 6,750,000. But for us, we are only getting the contribution from the special order of 7,700,000. of 3,750,000, which is less. So it means there we are not going to accept the special order, because if we accept, we are going to make a loss of 3 million, because the contribution is 3.750 million. If you less that from the charge they are going to charge to us of 6,750,000, you find that you are making a loss of 3 million. So that's why we need to consider all the other factors before making a decision. So here we are saying that the special order should not be accepted. Since the discount of 6,750,000 to the existing customers is higher than the contribution from the special order of 3,750,000 shillings. So is higher than that by 3 million, because it is now we are making a loss of 3 million. If at all we accept. So this means we accept the special order shall lose 3 million. $3 million by the existing customers, asking for the discounts. So it is better we don't accept it, because if we do, we are going to make a loss of 3 million. So that's how we make sure that we make a decision basing on all the aspects that are going to happen, when you have seen everything, even the non-monetary factors. So that's all that I wanted you guys to pick from this. Thank you for watching. Until we meet again, where we are going to be looking at September 2022, question 1, part A, Roman numeral 3. That's going to be our last simulation, and we shall have some of the other numbers in our preceding classes. But if we do that, then I'll be very sure that at least we have covered each and everything. So thank you for watching. Let's meet in the next video.